Hello everyone, welcome to Elliott Wave Forex.com YouTube channel. This is Henry and today is Wednesday, April 6th. The time is around 2 a.m. GMT. And today we're going to be taking a look at the chart of gold. This is the 60 minutes chart. Okay, we're gonna discuss shorter cycle as well as the longer term or the larger degree cycle as well. Now first, in the shorter cycle, what we can see right here is we are calling this rally to 1966 ending with X. Now just by looking at the label here, you can conclude that the move down is in the with Y in the intermediate degree. Okay, and that move down is a corrective structure, right? Because it is an X and a Y after all. It's not a with 1, with 2, with 3. So that means the move down is a corrective structure, and that's what you can conclude by looking at this 1 hour time frame. Now let's look at the structure in the shorter cycle. From this X in at 1966, you got what looks like a 5 ways down, right? It looks like a 5 ways down. And look at the structure of the rally since then. You got what looks to be a 3 swing here, another one that looks like a 3 swing again. So you can see in the shorter cycle, all the rally, it does look like a 3 swing so far, and that will suggest that most likely we are not yet ready to rally again to the upside, right? Now remember, the X here is giving us a clue that the right side is bullish because it's not a 1 2 3 4 5 to the downside. It's just a WXY, which is a corrective structure. But you see in the rally so far, it seems like 3 swing here, 3 swing here. So overall, it still can be some kind of a corrective structure in the rally, and so maybe it's not ready yet to rally again and continue the bullish trend to the upside. Now let's zoom out a little bit and see what we got. So we got gold here on the weekly time frame, right? And almost breaking the previous all-time high, right? And now if you look at gold against other currency, like gold against the yen, for example, this is gold against the yen, XAU, JPY, already breaking to a new all-time high. Now yen has been the weakest currency so far, as you know, so it's been rallying very tremendously, and you know this is absolutely very bullish. It continues to make new all-time high as we speak, and it is bullish against this March 1st, right? This is the low in which this latest rally should be bullish against the March 1st. You take a look at XAU against euro, right? Gold in terms of euro, also all-time high. That tells you euro has been pretty weak as well. So this is March 1st, the same as XAU yen, bullish against this. Continue to go up. We continue to like more upside against this one, against February or March here. Now gold against the pound, another one, also breaking to new all-time high. You can check the peak here is 1578, and this peak is 1579. So it did break above this previous peak, which makes it bullish against this one as well, the March 1st. So you can see gold has made new all-time high against many other G7 currencies except against the US dollars. But there is no exception here against US dollar. It's just a matter of time before we finally extend higher again, resume the upside. So the larger degree trend therefore is bullish against the same March 1st as all the other gold pair, right? So now basically any pullback therefore is going to be a corrective pullback, and it's going to find support in 3 or 7 swing, right? And if you take a look at the daily now, what we got here from the peak in gold, which is the 2000, after the war breaks out, you got what looks like a lower low sequence here, right? You got a lower low sequence like this, and that suggests that if it can go to a full 100% extension, which sometimes may or may not, it doesn't always have to, it can go all the way to 1790. This is going to be in the next support, all right, for gold, assuming we really can go all the way down, which doesn't have to, by the way, because remember the overall trend remains bullish, but shorter cycle, you cannot rule out a move down to as low as this, or at least we can reach 100% of this, like this leg here, 1 2. So you can go to 1873 all the way to 1826, at least into the area, provided that this is, like a corrective structure here. So what's the conclusion here? The conclusion, it remains bullish. However, in the shorter cycle, uh, we cannot completely rule out another move down to, let's say, around 1870. Now you don't need, when you look at the chart, guys, don't be a little more strategic, and don't look at every single swing. Oh, you're thinking it will go down, will go up. You have to know the sort of the main idea, the main path, and what will be the main trend, and so on. Because a lot of people focus so much on, oh, it will go up first to 1955. If it doesn't go up there, the chart is wrong. And if it goes down, then what's going to be next? So then that means you are kind of lost. You're lost in terms of the path if you are so focused on the short-term swing without understanding the main idea, right? The main idea is simple. The main idea is bullish. The main idea against March 1st. So technically, a pullback is an opportunity for you to buy, technically speaking. Now, second main idea is because it shows a lower low from here, and because the rally so far looks like a three swing. Second idea is we could see more downside well below 1966. So what does it mean? We need to go 1950 first before going down? No. We can go down right here from this point. For example, I can simply move it here, right? So that's what it means by understanding the main idea instead of trying to check whether every single swing plays out according to the chart, right? Doesn't always have to play exactly according to this chart. It can go down now, for example, which doesn't really violate anything. As long as it's staying below 1966, we still cannot rule out another leg down. So does it mean we are bearish gold? We are not, because obviously if you look at gold against other currency, this is absolutely as bullish as it gets, and pullback therefore is just temporary. And I know a lot of people, if you look at it hour by hour, day by day, seems like it's not moving, but it's not. It's actually moving, right? And it's just a matter of time before the pullback is complete. Then we can start the next leg up again in gold. Okay, so if you do want to get regular updates on gold or other commodities, forex, indices, do feel free to check our service. We are for the index trial. I'll put the link in the description of the video. So I'll see you all again next time. Have a nice day, everyone.